Good morning, everyone. This is Daily Trading Analysis with the weekly recap video. In this video, we are going to review the fundamental data of the week from Monday to Wednesday. We are going to analyze if that sentiment was bullish or bearish, and then we are going to cross-check that sentiment with the chart from top to bottom, from weekly, daily, and coming into lower time frames to really see the nuances and details that made the week. And with the possibility to find some kind of advantage for next week, I will provide some kind of forecast. And also we are going, as always, to cross-check other markets to find convergences, correlations, and some divergences that may provide us with a kind of an edge and opportunities for next week. So first, we are going to start with, as always, with the fundamental data. Really important week in which we got CPI data on Tuesday. And on Tuesday, the bad thing that surprised the market was the uptick in the headline inflation year over year. From we were expecting 3.6 from 3.2, and we surprised with an uptick of 3.7 year over year. Obviously, this headline inflation is including energy, which, as we are going to review in the charts, spiked big time in crude oil prices. So that was expected. It is affecting inflation, but the good things, quote unquote good, the decent things that markets are thinking is that if we exclude that energy spike that at some point is going to go lower due to the manipulation that Saudi Arabia and Russia are doing with production cuts that is affecting prices, this crude oil spike is not caused by huge demand, that is the big concern from the Fed. This crude oil spike is caused by supply manipulation. So if we focus on the inflation on the core side, we saw core inflation year over year to go down from the 4.7% and as expected 4.3%, and month over month both readings were almost as expected. The headline was as expected, but going higher from the 0.2% previous, and the core inflation that's focus, it's slightly higher. So we are going to take that into consideration. From 0.2 we were expecting flat, but we got slightly higher. So this is the CPI, and this is basically how the markets were reading that. But on Thursday we got also PPI. But before moving that, let's not forget about the 30-year mortgage rates that are continuing higher from 7.21 to 7.27. So interest rates continue pressuring households in terms of the 30-year mortgage rates. Thursday, we got PPI, and PPI was a little bit of a surprise because it was really higher than expected. We were expecting flat reading, and from 0.4% we got 0.7%. And this really caused the markets to really start thinking about a bad sentiment. But as you can see, as we are going to see, this kind of information went the same way as CPI. The PPI went higher, and this is due to energy prices on the production side also going higher. So that's the same kind of sentiment. The big thing that I think surprised the market was the strong retail sales, 0.6. We were expecting a lower from the 0.5%, a lower 0.2. And we got 0.6%, and this still shows signs of consumer being really tight. And that's really a concern. So Thursday was a little bit of doubt on concerns regarding, okay, CPI, we can more or less think about this way, but PPI and retail sales, and also the initial jobless claims going a little bit higher from the 2017, the 217,000, we were expecting a downtick to 225, but we got still a tight labor market. So we started Friday thinking about, okay, how can we finish the week? We need more data. And obviously, we got two big datas, the New York's Empire State Manufacturing Index and the preliminary, remember this is preliminary, consumer sentiment from Michigan. So the manufacturing index was a big time blow up. So from the 19 negative, we were expecting a little bit of uptick to minus 10. And look at this. This is a big time surprise. And manufacturing and production went really higher on Friday. And this is what I think we are going to see that from on the charts from 8:30, and then at 10 we continue lower with a preliminary sentiment of downtick. Remember, bad news looks like are still bad news, and bad sentiment from the consumer looks like we are not going to reach or target or meet the soft landing that the Fed is really looking for. We were expecting a flat 69, but we got a down 67. So overall, CPI in terms of core inflation, really mild, but the uptick in the core, the uptick in the PPI, the uptick in the retails, the uptick in the manufacturing, and the downtick in the consumer sentiment, these were all bad news. And I think markets were focusing on that. Starting the week, we were quite a decent sentiment, but from Thursday and the final Friday, I think we sold off due to that accumulation of bad fundamental data. However, if we check the interest rate probabilities, there's no change. There's no change. Remember when I told you focus on November and December, on these two guys. And we are seeing lower in these two percentages, we are seeing lower probabilities of a hike, and more are accumulating to the flat percentage. This is a change. This was almost 50, and it went 40 on Thursday, and on Friday we basically went really down. So this is looking more and more as a flat line, as a terminal rate for this year, and starting next year, this is not changing. From June, we are starting to see more and more cuts. Start stepping down because it's not doing one at a time, but we are looking at finishing the year at this level. And from 525 to 450, it's not 100 basis points, it's 75 basis points. It's not a quick cut. And I think this is something that we have to watch because market expectations were really showing this as the terminal rate for 2024, 100 basis points from the 525. But more and more, we are not pricing in that much cuts. So that's something worth mentioning. But at the end of the day, we are seeing no more hikes this year. So now that we have an overall view of the fundamental data, now let's jump into the charts as always, starting with the Nasdaq with the weekly chart. And you will notice that I have a big trend line and a big compression on the weekly to this kind of descending trend line, also ascending trend line. We are compressing, but look at this week. We couldn't break out from this weekly last week high. We couldn't go up, but we didn't go down either. So we are in an inner candle, inside candle from previous week, but this is not a good candle. This is pressuring to the downside with a popping tail, basically. small body, big rejection candle. We go to the daily, we can see that the structure that we are forming from the top of 17th of July, the compression, lower highs and higher lows are compressing the market. We are respecting last week low and we couldn't break out last week high. So that is really interesting. We also have this support down here at 15,000. So the structure basically for next week, it's really interesting because we might see A, B, C, D. If you are trading stock markets, this is a setup that sometimes resolves higher. This is a possibility, but obviously with an ABCD, with an ascending trend line, we can also have the possibility of breaking lower at this ascending trend line and reaching 15,000 again, in which we have strong support there. So this is the two options. The first option to resolve the ABCD and the second option to break down the ascending support towards 15,000. So that's the plan, or at least the idea in which we have for next week. But if we check the overall week, it was an inside candle. On the weekly chart, on the daily, it was a range bound activity with last day Friday really setting off. And last day Friday, if we check my 30-minute levels, I reviewed this in yesterday's video, but let's go through them real quick. Sorry about that. So I got this support, and this support that was coming from here, from the left side into this level. And basically from this one at 15,580, we basically really sold off. We sold off immediately, starting with the rejection of settlement on the manufacturing index news. We went straight down, really like a knife with this huge candle. It was clear for me that neither one or two support were providing any opportunity. So I was really bearish and I was looking for an opportunity to the downside. Where I have that opportunity, you cannot just chase long this. I was short here, went down, bounced, and then I got short on this candle for a decent trade, but really big time sell-off. Look at this. This is one time framing to the downside. If we check the 1 minute chart, this was really hard to follow. We got several opportunities here in this kind of channel, but then we didn't get a strong bounce. I was looking for that for another rejection, but then we continue lower and lower, and the best opportunity for me was this side. The breakdown of this ascending towards downside. So that was my trade, but really hard day to trade due to the strong move to the downside. And also it was quadruple witching day. I didn't want to get caught on a big reversal on a Friday afternoon quadruple witching day. That would be really bad for you. So basically that was the Nasdaq, and this is the day in which we had a strong sell-off. That's why the second option of breaking down the ascending support towards the downside is still an option, despite the fact that we are range bound on the week. But still, we have two options. We are not clearly selling off. Despite yesterday's price action, we are still in range, and both options are still nice. So look for opportunities for ABCD to resolve to the upside or break the ascending support to the downside towards 15,000. What else? The big tech companies, real quick. Apple is still holding this ascending trend line. Really bad day for Apple and really bad week for Apple. So be careful with Apple. It may have more potential to the downside. Microsoft, it's a really bad day on Thursday and Friday, rejecting this possibility, but still grinding higher. And don't forget about the 20 moving average on the daily. We are on the upper side of that moving average. Tesla, really surprising that it's holding higher towards this zone of the gap. So really interesting for next week. I think it has some potential to really fill the gap up here and take a lot of people by surprise, as always. Remember that we broke out from this descending pressure with a gap. So strong price action from Tesla. Amazon, minus 3% on Friday. Consumer discretionary is really feeling the pain. We were quite well established for a move higher from the August 2022 levels that we are pressuring. It was compressing, but it broke out. But we are again almost at the same level of the breakout with these two rejection days. So be really careful with Amazon. Quick rejection there. Google also compression to the upside in this range, trying to move higher. But the difference with Amazon is that we have equilibrium candles right below this gap. So I think Google is still on the table. Nvidia, really, Nvidia is just insane. With these 2 days, we are now entering the gap. We fill the gap partially. It's still a small gap there, but strong. Look at these candles. Strong red candles. I don't want to trade. There's a lot of red on Nvidia. I don't know. I think Nvidia can obviously, based on previous price action from months ago, it can certainly do things like this. But it can also certainly do things like this. So I don't trade Tesla. I don't trade Nvidia. I would like to see some clear direction to really provide some sentiment to the rest of the market. But I don't know, guys. Meta really setting off on Friday. Big time sell-off. If you see the 1 minute chart, it was, destroying. So on the daily, we have a clear rejection again from this range, but it's trying to hold this kind of it was breaking out. It's trying to hold this ascending breakout at 300. We are right now at 300.31. 300, really clear level. If it doesn't hold, we might see again a rotation to the downside. Be really careful with Meta. We review the Nasdaq completely, the big tech companies. What else? As always, we have to watch dollar and yields. And dollar, let me tell you, as always, it's quite strong. Look at this entire move towards 105 and perhaps 106, but it's putting a bottoming tail. And it started hesitating on Friday because I was looking for longs in pre-market, and it was quite really bad until we got the numbers and it started going up again. Taking out some shorts, I think. This huge candle support, huge move, and I think dollar has still legs towards 106, in which we have a really big time resistance here. So dollar going higher and higher is putting more and more pressure in stock markets. The 2-year yield, I reviewed this on yesterday's videos, and the trend is not looking good. Trend is not looking good towards, on the 2-year, 5.1%. This will be destroying the markets. We are at 16 years ago levels. Wow, that's the 2-year, the 10-year. It's continuing pressuring. We got a nice rejection, but then again, 2 big candles, and the trend, it's super clear. It's super bullish. Both yields are at 17 years ago levels. Be really careful with that because yields are continuing higher, and despite the fact that markets are not pricing in interest rate hikes this year, yields are moving higher, and this is not good. And treasuries that are really sensitive for more interest rate are it was quite a big move to the upside, bouncing from 92, but again, really bad week for treasuries. All caps are also affected right now, right, supporting the 200 daily moving average, and also Bitcoin. So the risk on assets are not there yet. We are still trying to have some kind of support on Bitcoin at 25,000. But this was really bad. This rejection, I think, destroyed a lot of people that was trying to look for 30,000 again. And I mean, Bitcoin is just this volatile, but it's in a dangerous spot because it's been manipulating to try to hold this range. But if we lose this range, and we can see this is 22% potential to the downside. There's nothing down here. Be really careful if you are trying to hold 25,000. And I think that's all. Finally, XLF, as always, reviewing financials are really looking strong. That's good news for the markets. But let's now do a quick review of those sector performance, because I think there's some kind of rotation in the last 5 days that we have to pay attention to. Look at this, XLU 2.79%. On the bottom of the barrel, we have technology, minus 2.25. And where are the other defensive sectors? That's one, that's second one, and that's the third one. So we have 3 sectors, defensive sectors up here, the weak performance, but we have also all these 3 that are usually risk on sectors. Consumer discretionary looking quite bullish, despite the fact that inflation is still going up. Financials, as I told you, XLF is looking pretty nice, and communications, it's almost 1% on the 5 days. If we check for the 10-day, the 2-week performance, we can see that energy, obviously, these 2 sectors are really bad sectors up here. And then we have technology at the bottom of the barrel, and it's not clear that we are seeing a rotation on a 2-week. But on the 5-day sectors, watch out, because XLU being this strong, if we start seeing staples going up, and if we continue seeing healthcare going up, we might see some rotation to defensives. And next week, remember, next week we have we have on Wednesday at 2 p.m. we have interest rate decision. The projection, the forecast is being flat, but be really careful because we don't have anything on Monday. We have a little bit of numbers for housing sector on Tuesday, and in the absence of news until Wednesday, we might see continuation to the downside on the Nasdaq. And as I was saying, this ABCD potential might resolve higher, but the absence of news and fundamental data until Wednesday, we might see some move to the downside. So be really careful because anything can happen. You already saw that on Friday. We were watching for a breakout of 3 towards the upside, but that didn't happen. And instead, we sold off almost 2% on technology. So be really careful with that. And that's all from my side. I hope you find these weekly recap videos really interesting. If you do so, please give it a like, subscribe to the channel, because I upload videos like this on a weekly basis on the weekend for you to take opportunities for next week, and on a daily basis from Monday to Friday for market forecasts, market updates, and market recaps So thank you for all the subscribers, all the views. Thank you for supporting the channel. I hope you had a good trading week. We are in range, and I think for next week we will be getting better opportunities to break out of this range to the upside or to the downside. So be prepared for that. And remember that discipline and risk management are key for your success. Stay safe, everyone. Have a nice weekend and see you on Monday.